The U.S. housing market recovery is putting Fannie Mae back in the black. The U.S. mortgage financing giant racked up a profit of $17.2 billion in 2012, wiping out its $16.9 billion loss from the previous year. Now, this marks a big turnaround for Fannie Mae, which just 4 years ago was bailed out by the U.S. government when the real estate bubble burst. Fannie Mae still owes U.S. taxpayers $117.1 billion, but it has repaid more than a quarter of the federal money that it was given to keep it afloat. And joining us now with more on what this means for government regulation of the housing finance market and what it tells us about the overall U.S. housing recovery is Johnathan Miller, the president and CEO of Miller Samuel, a real estate appraisal and consulting firm. Johnathan, thanks for joining us again.
Great to be here.
So, Johnathan, do you think that government regulators will look at Fannie Mae's record profit as a sign that the housing market is well underway in terms of a recovery?
I think they see it as working or moving along the same way as the housing market. I think it takes some of the pressure off of Congress to do something about Fannie Mae since it's starting to make money, but it's wholly dependent on the housing market doing well. And if we've learned anything from this last downturn, is that housing goes up, housing goes down.
It does. You mentioned Congress. What should the government be doing in terms of its heavy involvement in Fannie Mae? Time to unwind some of the financial assets?
Well, right now it's a bit precarious because roughly 90% of new mortgages in the U.S. go through Fannie Mae in some form or another. I think the pressure is on the regulators to convince Congress to do something about it. They've actually created a joint venture between Freddie Mac and Fannie Mae, the two agencies that handle mortgages in the U.S., to try to figure out and come up with some solution as an important part of the housing market, but not something that the taxpayer is going to have to consistently bail out.
Many have argued that it was the creation of Fannie Mae that actually led to the housing crisis, because Fannie Mae essentially made it easier for people to get loans for homes, therefore relaxing the standards for first-time home buyers and creating the housing bubble. What do you think about that?
I don't think that that's the problem. I think the problem is that over the last decade, Fannie Mae had to serve two masters. It had to serve the taxpayers' interests and their shareholders' interests. And what we learned was the shareholders' interests became front and center, and they took risks that they shouldn't have taken.
What do you think is the #1 challenge holding the housing market back from a full recovery?
Oh, I think the #1 challenge, and we're seeing it right now, is tight credit. That lending institutions are still very, very cautious because of their legacy of bad lending decisions in the past. They're making things very tough for borrowers borrowing money. However, that's fared well, and that's one of the reasons why Fannie Mae is making money, is because they've really cleaned up their act in terms of the quality of mortgages that they're guaranteeing.
So we've got these record low interest rates, which have made mortgages relatively inexpensive, but you're saying lenders are still not lending. So are the government's policies to boost the market, the Fed low interest rates, actually helping them?
In many ways, I feel that the low interest rate policy has run its course as it applies to housing. And then I actually think that low interest rates are keeping credit tighter because they're essentially telling the banks, look, we're concerned about the next several years, so we want to keep rates low at least through the first half of 2015. You already have a jittery banking community that keeps them more conservative.
We've had a lot of housing markets in the U.S. pop recently because of overseas buyers. In fact, a lot of Chinese buyers have been flocking to the housing market in Detroit. So how much of this housing market recovery that we're seeing in terms of home sales and in terms of home prices based on overseas investors as opposed to local buyers?
Well, I think there's a tremendous influence of international purchasers along the coastal markets. New York is certainly benefiting Miami. You are seeing some interior benefit in the U.S., but I think the benefit is on the east and west coast. They are coming in. They're not impaired by the credit tightness here in the U.S. They're generally cash purchases, so they can circumvent that and cut better deals.
What should the government make sure that it's doing to maintain the recovery is on track? We've had tax incentives expire, and tax increases on home sales. Is this the right way to go?
Well, I think the tax incentive programs that were tried in the past, specifically in 2010, actually made housing worse. So it created a short-term benefit, but it ended up falling apart. So I think in many ways, I think government needs to back out and just focus on this Fannie Mae question. And then the other is that I think we want to rethink this low interest rate policy in terms of trying to ease credit. That's the big challenge in the housing market right now.
Okay, Johnathan Miller, thank you so much again
Pleasure.
for joining us.